I think the retail sales number was really the key focus this morning, and it was really disappointing. Now, of course, the consumer was losing momentum going into this final number for 2018, but it also reflects the government shutdown, or at least the initial days of the government shutdown. So the question is, does this weakness reflect a bigger issue in terms of the consumer pulling back, or is this temporary weakness, and we should expect a rebound as we wait for those January and or February figures? So this is really going to take a little more digestion to determine exactly what this means. Near term, however, we would expect this to shave off a sizable amount from fourth quarter GDP. Already we're seeing the street lower their estimates, and we could be talking about a number below 2.5%, closer to maybe a 2% GDP level.
Closer to 2 for the fourth quarter is what you're saying at this point. So I mean,
absolutely, for the quarter. Remember, though, for an annual trend, we're still looking at about a 2.5-ish% pace, in line with what we saw for 2017.
Right. In terms of getting a true grip on the economy, though, Lindsey, I mean, I'm curious because December, you noted the slowdown. January, we had, other external forces such as the government shutdown. We might not get clean data for a while.
You're exactly right. And I think in part that's why the Fed has taken this more patient tone. Now, they're pointing to uncertainty abroad and maybe risks of contagion here in the U.S., particularly as we talk about a potential importation of deflationary pressures. But a lot of this also is the Fed still trying to get a read in terms of directional momentum for the domestic economy. Have we hit a precipice? Is the economy going to continue to lose momentum from here? That remains an unknown, and uncertainty is never a good thing for the market and certainly not a good thing for monetary policy decision makers.
Let's say inflation came in hot. I mean, I think this is what the markets are really looking at in terms of whether or not the Fed will actually remain on the sidelines. It did seem, according to Jay Powell in his latest statements, that the Fed is more comfortable with an inflation overshoot. And so we shouldn't really be concerned about inflation getting a little bit hotter in the face of perhaps weakening data.
Well, I don't think that's a concern right now. I think the bigger concern is a disinflationary trend. Now, obviously, the PPI, the CPI is still above 2%. But the Fed is focused on the PCE, and the PCE has shown clear signs of waning momentum with both the headline and the core now back to that 2% level and in fact pushing below that 2% target. So the Fed at this point, I think, is concerned about downward pressure on prices and further downward pressure still as we talk about that waning momentum for global commodities, particularly in the energy market.
Does your outlook change much for the first half of the year, given the data we saw this morning?
It really doesn't. Remember, this is one data point. Right. We're looking at a longer-term trend, and what we see overall is that the consumer has been increasingly reliant on temporary factors like ramping up credit, drawing down savings. We haven't seen that sustained improvement in wages. We did see a little bit of a backup, absolutely, but we do think it's a little too late at this point, with the risk of recession now looking like it's gaining momentum out in 2020 and beyond.